Ladies and gentlemen of the crypto space, we're live on a Friday, July 12th at 11:35 a.m. You know, we've been doing this shit for a couple of years, haven't we? And I'm just, nothing has changed with regard to my sentiment, especially since 2022, the current. Things got a little bit weird between 2020 and end of 2021, but post 2022, was really the start of looking at the space different, looking at the economy different, looking at the world different, looking at everything differently. Why? Because I realized everyone was wrong. Everyone thinks wrong. Everyone understands the system wrong. Everyone conforms. And really, those Wachowski brothers just freaking nailed it. Everyone's freaking blue pilled. Everyone shares the same ideas. You remember how viral it was? Money printer go burr. Like the Fed prints money like that. Like it's just discretionary. That's a good word, by the way. It's like someone says something and it just goes viral, whether it's factual or not. And no one cares to understand the nuance and ask the questions. The questions to understand what's really going on. You know, nowadays there's absolutely no excuse to not ask literally any question. Why? Because you can ask ChatGPT. Oh my God. And at minimum, it's going to have a rational conversation with you. It's going to at least be logical. And that's probably the first thing to assess in anything you're thinking. Is it rational or logical? And then you need to validate factuality. That's obviously critical, but that's literally the basis for making progress in anything we do in life. And now we can do it with a damn computer. It's insane. So I talk about AI a lot because it's really changed everything. And that's this year. That's 2024. It's changed everything for me and what I'm capable of. Because if there's anything, I'm capable of asking really good questions. Now, historically, I had to find answers to those questions in the hard way, the Google search. And that's really hard because if someone's answering a question and you're asking it in Google, it means you're finding like what, a blog post, uh, Stack Overflow programming, or actual data, documents, PDFs, what have you. And then how do you assess validity, or how do you bounce ideas? So progress involves the question and answer process back and forth. And as long as that process is rational and logical, progress is made. And it's very hard to do that just using Google. So I did that to a degree back in like 08, 09, because I had, with software, I could ask Google and I could find Stack Overflow questions about software. And I have no idea if it's right, but the thing about software is you run it. And that's how you're able to validate its correctness, because it's a compiler and a visual presentation of a user interface. But how do you validate correctness with regard to understanding of economics? And nowadays, once again, everything's changed with the likes of YouTube and, frankly, Real Vision and all the greatest macroeconomic minds. These are the boys. This is the good old boys club. These are the folks that understand the system. And not only do we get to listen to each one of them individually, we get to listen to all of them collectively, digest each of their narratives, and compile our own. This is the craziest realization. I mean, clearly this has never been able to be done before in history. And that literally can be done today for anyone. So thinking of myself, and I've been doing this for years, like someone who jumps on my stream and hears me for the first time is like, how do I get somewhere? How do I make progress? How do I get to where the captain is? It's a path, it's a journey. But it all starts with information. It all starts with asking questions. So one of the destinations or signposts along the way was really understanding how money works. And it's not no fucking Fed printer go burr. That is literally like microscopic in the grand scheme of things. It's not an investment. And right now you're probably joining to think about what the hell do I going to invest in to do well. And the other component of that is time horizon, but how money works. So that's why I come back to this chart. And I've been talking about this chart for years. And then, Mike Howell wasn't really, of cross-border capital, wasn't really public or as known until maybe I think Raul pointed him out. So I talked about this chart before I knew of Mike Howell. Raul really didn't talk about the move indicator. But to me, this is an insane chart. And you can look for correlation and inverse correlation. That's interesting. But it's really what it means. And it's very simple to understand this chart in crypto terms. Crypto. These markets, these systems, these protocols that we use, this chart tells us something that we can understand. And I like to remind folks of this because I know folks are always joining. There's new folks, and then there's old folks that are like, how do I tell this to someone? It's not so easy to tell this shit to people. You tell people the greatest idea, but unless they're open to digesting it and understanding it, right over their heads. So, I mean, this chart you best understand through Aave. If you got a bunch of Ethereum that's going from $3,000 to $4,000, 3, 4, 4, 5, 3, 5, 2, 7, back to 4. I'm just giving an example here. And you want to borrow capital, and your health factors going all over the place. It's called collateral volatility. Now, for the world isn't using Ethereum on Aave for collateral. The world is using United States long duration government debt as collateral with banks, European banks, but really banks everywhere. And it also counts for in the United States, even though they call it the Eurodollar system. It's literally the same mechanic when you post collateral in the United States. And that collateral you use to borrow against. A collateralized debt position. Oh shit, maybe you've heard about that acronym. So if you post collateral on Aave and it's Ethereum, and the Ethereum is $3,000 for 6 months, are you just going to let that Ethereum sit there and not borrow against it? Even me who doesn't borrow much at all, I have no tolerance for risk. And that's an interesting conversation unto itself. Investments versus leverage and liquidation risk. Two different concepts. Buying investments is a different type of risk than borrowing capital. Okay. So even if Ethereum is super stable for like a month, I'll borrow some damn capital and maybe do something with it. Much more likely than I would if there was a crazy amount of volatility in the system. This chart is the volatility in the big boy system, the world, the global collateral market. So aside from all the shit that's screwing people up that's pertinent and meaningful in each little component of information in its own right. Like interest rates and interest rate spreads, cross country spreads, market rate of respective government debts. Okay, that's all meaningful. The yen, which is literally like, and China literally collapsing right now, and just a complete deflationary meltdown going on in China right now, and they're trying to figure out what to do, even though they're pulling at $100 billion US dollars per month, which is crazy, 1.2 trillion a year. Um, Point is, when the collateral volatility collapses, this is an overarching indicator, an overarching observation, an overarching metric that tells us the structure of the system. Because this is the global Ave health factor, or affects the way the world interprets the global Ave health factor. When this collapses, the world goes to the butter zone. And apparently it collapses periodically. So I would say you can inspect a lot of charts and try and understand too much. This chart kind of tells everything, in my opinion. Every time we've gone to the time-weighted average price on the 6-month chart, nobody in their right mind looks at the 6-month chart. Only the captain. Captain looks at 6-month charts. I got no time for them short. Each one of these candles is 6 months of a human lifespan. And this is the biggest, broadest inspection you can have of where we are. Every time it hit the time-weighted average price, look what happened. I mean, this is obviously post-2008 where everything blew the fuck up. And everything was, we only have data back to 2002. But so this is the lead up to the GFC, and then basically the 2010s to give you like a time range for a reference for how to think about the system. And everything changes in the 2020s. And we're not even halfway through the 2020s. It's a different world now. So in the 2010s, every time you hit the time-weighted average price, collateral volatility got hammered down. This chart is why Janet Yellen, current chair of the Treasury, often says the deepest, most liquid market in the world. And that's why there's Treasury buybacks right now, to buy back the lower liquid components of the yield curve so that means there'll be a greater concentration of liquidity in the remaining components of the yield curve. That'll make a more liquid market, a more liquid collateral pool. More liquid, less volatile. Because everyone understands that the Treasury manages the global Ave health factor. Her entire role, the unspoken mandate, and they rope in the Fed all the time because clearly they've intervened via their QE, not QE, not QE, and all the programs that he could put to the BTFP is a volatility reducer in collateral because the banks would have unloaded their balance sheet at highly depreciated prices and thrown yields into the stratosphere. So the BTFP was a collateral volatility mitigation program. Every time it hit the time-weighted average price in the 2010s, boom, crushed down even in 2020. There's not no damn money printer go, Barry. At least look through the bullshit a little bit and look to something that is a more grandiose theme. Red pill the shit out of your mind. There's always a bigger story in play. And when you find that bigger story, there's probably even a bigger story. So I'm telling you guys about collateral volatility and giving you context for Ave and the health factor. There's even a bigger story than this. And there's a point where we start to speculate, and it gets conspiratorial at times, but it's interesting to think about no less. we don't need to digress into the bigger story because this is a realistic story unto itself. And this tells us where we are. It tells us where we're heading. It tells us what they're doing. It just tells us everything we need to know to find comfort, to let time pass. And then the market is going to market. The market is going to do what it's going to do, whether you like it or not. In 2020, everything exploded. And what did they do? They literally suppressed the volatility of the collateral. That's it. And what did the world do? The world expanded the dollar supply monumentally. And then it'll happen again when the collateral volatility falls off a cliff and everyone's health factor sitting at 20 and they drop it down to a 5. And there goes the global dollar supply. And then the rationale is, what do you do with those dollars? Oh, you invest. Optimistically, good investments rather than malinvestment. But the whole point is when there's excess dollars, you end up getting a shitload of malinvestment. And that explains, um, pump and dumps and rug pulls. But that's also explained by other phenomena as well, such as financial desperation and just a completely broken system of incentives and skewed resource allocation, because that's ultimately what a currency is. It's about managing resources and allocating resources. Anyway, that's getting deep, and that gets conspiratorial as well. So heading into from end of 2021 to 2023, yeah, all of 2022, everything blew up. So what's interesting is at the end of 21, December of 21 was the top in markets. So this is very much a forward-looking indicator. Because why? Through all of 2020, collateral volatility was, well, through half of 2020, H1 2020, collateral volatility was collapsing. In the second half, it was rising. But if you remember what happened in the second half of 2020, 2021, things got weird. And that was the Bitcoin double. And then, boom, Bitcoin went right back up. And you can see that right on the chart. Not on the 6-month chart. See it on the monthly. Oh, let's go to the weekly. So it's a double top. Boom, boom. So this is the second half. No, I'm sorry. Let's go to the daily. Boom, boom. Wait, what the fuck am I looking at? Here you go. Here's 21. Boom, boom. So this here, look, April 21. So it's heading in. It's a little bit before July, and then towards the end of 21 was your second top. Let's go back to move. 6-month. Oh, zoom in. So here you go. Here's July. And no, you saw, actually, the top was in 21, and then it double topped in 21. So interestingly, Bitcoin topped in an increasing collateral volatility direction. So this is that in that regard, this is a forward-looking indicator. So when this bottoms, you got broadly, you can look for inverse correlation, and it'll drive you nuts. It'll drive you nuts to try and find bottoms and tops. We all know that. So the point is, when this bottoms, in due course, things go risk off. Then the second you cross the dam, time weighted average price, shit's going to hit the fan. This is them losing control of the system, losing control of the collateral volatility. Because when the collateral gets volatile, people stop borrowing, global dollar supply stops expanding, and that means everything slows down, there goes GDPs, and everything just rolls over. It's a giant domino cascade. It's taken 2 years after the blow off top in H1 2023 for this to finally get hammered down. That's a remarkable candle. And on the 6-month chart, we've had 3 episodes that have produced massive shooting stars, which is a reversal indicator on this chart. So my 2 cents is, for a decade in the 2010s, they finally lost control in 2020 due to an exogenous force, whatever you want to define 2020 as. But things got shut down, and the economy, the flow of the economy got disrupted. The economy is dependent on momentum, consistency, predictability. Net 20, net 40, net 60, and orders. Consistent supply orders. There's a momentum to all of this. You have to make orders for products to be sold, and products have to be bought for products to be ordered. And that second that momentum gets disrupted, everything gets messed up. So everything blew up in 2020. And they hammered the shit out of it. And then they realized between 2020 and 2020, between that then and now, especially in 2023, when the banking system started collapsing, then they realized they had to restructure. And that's like DTCC, Depository Trust Clearing Corporation. I think that's the acronym. And like the central clearing of treasuries. They realize they need to gain control over collateral volatility. So how best to do that? You allow treasury settlement through, centralized entity, who's is the market maker for treasuries, basically. Facilitates the transactions, could slow them down, speed them up, and enforce rules, so on and so forth. So the last 4 years has been them executing that restructuring. And it took 2 years to start to stick, and it's taken 2 years for that volatility hammer to finally kick in. And that's where we are today. They have finally gotten control of the collateral volatility through centralization. It's a very common theme in crypto markets. How do you fix things? So centralization is much easier, and that's a very historic concept. Dictatorships are much easier to get shit done. So centralized protocols, much more gets done because you don't have to go through governance and voting and so on and so forth. Much less sophisticated protocol implementation. So we're in July of 2024. This is the butter zone, boys and girls. Gets weird below the 6-month time-weighted average price. Time-weighted average price doesn't mean that on a volatility indicator, but it's an average. And I happen to like the time-weighted average price when I look at price points on other assets, so I use it here as well. You could use the volume-weighted average price, or I could use moving averages, of which the length of time this chart has been in existence, you have a 10 SMA. Suffice it to say, you push it below the 10 SMA on the 6-month chart. You get below the 80s, 70s, and it's going to get so freaking weird. And unless you've experienced periods of time like 2020 or 2016, 17, or earlier, it gets really weird. But what have we talked about over the last couple of years? That weird is going to be different. It's a high interest rate environment now. And that whole, they're going to cut rates to zero and money print to go burr from the Fed. Yeah, no, that was all bullshit. Someone's going to have to buy it. Someone's going to, but I don't think it's going to be from a political optics perspective. The memes, they're not going to be able to recycle the memes. Social media is not going to be able to recycle the memes. They have to do it different. They're not stupid. They have to do it bigger, more structured, more optically friendly. So they'll probably just get the banks to buy them. Oh, coincidentally, they're also changing those rules too about the balance sheet composition requirements of banks. How much cash they have to have and how much or cash equivalents they have to have just in case there's a damn bank run. So they have to have shit on hand. And that's what those bank stress tests were. It don't make sense when you're like, oh, that's why they did what they did. So, Rao hits the nail on the head. I agree with almost everything all of them say. Luke and Brandon, Mike Howell and Lynn, and I'm a Bitcoin maximalist. But I'm much more because I understand all of these stories and all of these narratives, and I just think bigger. I'm like, all right, that's great. That's a great idea. That's a great idea. And I'm like, all right, let's put it all together and zoom the fuck out. So that's what I like to do. I zoom out on the big boys' macro theses. And then I simplify. And that's why I'm so cool and calm when everyone's running around like, oh my God, my portfolio. Okay, clearly you can't invest in dog shit, but you invest. So investing basically means find something good. Price is irrelevant. So how do you manage that psychologically? You know this is coming. You got a circle on the damn chart. It's coming. So I've told you over the years, you invest in shit that has the survivability attribute. It just needs to survive. But it's not surviving like, oh, I'm going to get in and get out. I'm going to buy some shit that's meaningful. Structurally meaningful, systemically meaningful. It means something from a fintech perspective. And this is when my choice will be appreciated. And by appreciated, we often say appreciation of price. So the assets I buy will be appreciated in price. Words are funny like that, semantics. So this is when my portfolio's down a lot since 22. Okay. What do they always say? Like 95% collapse in Bitcoin, and in the grand scheme of things, including those collapses, it's 150% APR on a yearly basis. Oh my God. Okay. So the thing that even the likes of Raul don't need to digest, I often talk about that, or I have talked about that, is the enterprise, the fintech enterprise in these crypto markets. So that's what I talk about. That's what I appreciate. I appreciate Forex markets and Eurodollar creditors and derivatives protocols because that's literally the shit that the banking system is. So therefore, these crypto protocols are banks. And we're early in banks. It's as simple as that. And when he talks about the banana zone, it's like, all right, everything is going to go freaking ballistic because there's going to be an excess supply of money, and all of a sudden, you could borrow at 4%, 4.5%, and collateral volatility is low. So some big company is sitting on a shitload of balance sheet, and they're like, and the bank gives them a deal instead of 4.5%, they give them 4%, 4.25%. So they're like, oh, we're going to do a lot of hiring, or oh, we're going to start a new factory and everyone's going to get bonuses, and oh, there's going to be, so everyone starts to feel good. And when people start to feel good, they start to do funny things, weird things, things that they don't typically do. And currently, in the fear and greed index on Bitcoin is like basically abysmal. Everyone's like, oh, it's all over. So when everyone starts to do weird things and everyone thinks it's all over, they're like, oh, I got a great idea. I'm going to invest my money because you got to also understand that we're the few. The few that have been talking about this, but the majority do not think about the concept of investing. The majority don't own anything, own nothing. The majority get a paycheck and they're like, what am I going to buy? What am I going to do? What am I going to spend my money on? The majority are blue pilled. So the weird for them is to literally be like, oh, I'm going to invest. Because that's them getting wild. That's them getting crazy. They're going to invest. Meanwhile, literally, that's all we talk about is all the nuances and subtleties and what's so meaningful about what we own. But that's not what the general public talks about. So to understand this comfort and where we're heading, you need to understand the blue pill part of the world, which is everybody. and what causal behaviors trigger their weirdness. So everything, all these macro indicators, anything I pull up, even politics, it's all pointing to the same thing. And this is that 4-year cycle that Raul talks about from a global debt refinancing perspective, Mike Howell as well. And that's what the Bitcoin maximalists talk about from, like, 250 days after the Bitcoin halving, everything goes parabolic. It reaches an all-time high. Yeah, but it's not that. It's all about behavior and psychology and blue pill, red pill, and realizing that the general public is like, has no concept of investing whatsoever. So, anywho, that's a start of a story of peering through the bullshit. That's what we've done over the years, is just peer through absolute insanity to see something that's actually real about the world that we live in. And clearly it's quite a red pill perspective. So throw some questions from X or YouTube. Ask away, because what's the point of me just monologuing my ideas if I can't answer questions from folks about your ideas? We started this stream about questions and answers being the only way to make progress and better ourselves and do better for ourselves and our family. Go ahead and ask some questions. I don't look at the charts much recently. I keep tabs on them. Clearly, I have my watch list, and I look at Bitcoin, and then I'm like, all right. I go over to, Bitcoin's back at 58. It was like 57.1, and everyone's like, oh, it's going to break into the 56s again. And I'm like, it's back at 58, great. So Collateral's doing well. Very nice. Can borrow capital. This is really cool. I like going 3.8? No, holy shit. I could literally buy 2%? 2% fixed rate? That's crazy. You could borrow at 2% fixed rate. That's weird. Maybe I just pay off some shit. I got a 10% thing that I got going on in Meat Space. Maybe just pay it off with this. It's actually not a bad idea. 2% fixed rate. So, obviously the other part of that equation is where you got cash flow from. And if you have cash flow just from work, that's where investments come in. And the investments pay off your fixed rate debt. So I also like this recently. I was over here in Lamberland. I have a feeling not many folks have seen it yet. But I need more capital to get to a proper position size. So if you get 50x SFRAX, borrow APY is 4%. Okay, so the spread's coming down. So if you borrow APY is 4%, but SFRAX is pumping out 7%, spread, let's say, is 3%. So, all right, so that was a quick diminishing return on investment opportunity. I was thinking like borrow like 50K and 20x leverage it to a mil, and 7% on a mil is 70 grand. But now that the interest rate's up at 4 and change, you're literally paying 40 grand to make 70 grand, so your spread's 30 grand on the mil, and that's entertaining 20%, 20x leverage. So that doesn't really float my boat anymore. Go to the leverage. 50K, borrow a mil, and I don't have, the debt's too high. All right, that's not going to work. Why is the debt? Oh, that's why, because I don't have an account balance. Yeah, I wish it would show you the liquidation. I bet you the liquidation is probably like 90 cents. So that'd be a 10% DPEG. One, it's on SFRAX. So two, it's Llamaland. So it's soft liquidation and deliquidation. So that's quite a fascinating consideration. That's why there's 50x leverage available. Oh, and they also total debt. How much do they have? Oh, there is 1.16 mil available. This is like 200 grand yesterday when they launched it. So this is interesting, but not at the spread. It'd be nice if he could borrow 50K and make like 70 grand a year, which is like 125%. You would take 130% APR on stable coins and 130%, and you're paying 2% fixed rate. That's kind of crazy from a carry trade perspective. That's something that caught my eye, but I would need either more collateral or greater leverage, and I'm not going to take greater leverage. Like the 20x is an insane amount of leverage, but this is literally what the big boys do with global collateral and U.S. bonds. And when I talk about the move indicator and the global Ave health factor, how much they're leveraging? How much you think they're leveraging U.S. debt? 20, 30, 40, 50x. Okay. I can't really stomach that shit though, unless it's like 100% APR. Which is what these fuckers are getting on government debt, especially at 5%. They're literally 20x leverage on 5%, duration U.S. debt is 100%. The big boys out there are getting 100% on their collateral or um, on their principal that they're supplying to collateralize a debt position. That's crazy. What's up, Buttercup? Tapsy's in the house. Arrow, Iden, DA Advisor. Adam, hey friend. A. Smith, Sir Joe, DCA Man, Raul. In your opinion, what are the most interesting moats in DeFi? Moats. Immutable protocols. That's the biggest moat. Especially shit that survived from 20 and 21. If it survived 22 and 23 and 24, it's got survivability written all over it. So then the equation is simply reduced to getting the cheapest price possible. Because it will be here in 28, 32, 36. It's just going to continue to exist in perpetuity. That's the biggest moat. So the biggest moat by far is the Curve Federation. By far. There's no proxy contracts of the likes of other protocols. Very excited for Tapioca to prove itself. Excuse me. That could be a big deal. Clearly, there's no lendiness, so they talk about that, and I talk about that. They got to prove their lendiness. They got to prove it works. So it's quite early, but the price action on Tap is insane. That's just crazy. I'm not interested in ZRO, Love Layer Zero. It's a moat. It is just literally established in these crypto markets. But I'm very excited for Zero as collateral on Tapioca when that launches. That's going to be, they think, their launch strategy. So that's really cool. Crush, so end of 2021 narratives. Let's see if I can find it. There's that post I had with Yoda for quite some time. It was my pin post. Let's see if I could find it. Just a couple of quick searches. 2022. I nailed this back at the end of 21. Ah, oh my, did I nail this or what? Dude, guys, this was 2021. Seamless cross-chain interrupt. We're literally talking about O tokens right now. I mean, Stargate literally takes 20 seconds. It's crazy. If you haven't used Stargate, between like any chain, it's like 20 seconds. Boom, 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 boom. It's just V2. Stargate V2 is just like really, really cool. But there's a lot. There's a lot of protocols. Like at this point, big fees for crypto Rubik, but layer swap is cool. This is cool tech. Rubik. This is cool tech. It's all such cool tech. We had none of this in 20 and 21. None of this shit. This is crazy. And then, of course, Thor swap. Thor's a big deal. This is cool stuff. And oh my God, did I nail that narrative? This is gonna be everything. Seamless cross-chain interop. Just throw capital at some point. Did I write this here? No. At some point, you're not going to know what chain you're operating on. And guess what? When you're using Ravi or whatever wallet at this point, you go over to anything. Arbitrum, Linnea, this is Nile, this is Linnea, and this is Mantle. You go over to Phantom, you go over to Optimism. The wallet just does it. You're not swapping chains anymore. I don't even think about that anymore. It's just like go to the site, click, 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 go to the site, click, click, click. It does it automatically. Man, seamless cross-chain interop is real deal nowadays. I mean, it's going to just get better. It's just going to get weirder and weirder and weirder. Disintermediated protocol managed arbitrage, cross-chain liquidity provisioning, MEV mitigation. We got the MEV mitigation and capture systems. Be it what CowSwap does and those folks, or the new stuff that Curve folks are working on with shutterized Gnosis chain. Man, nailed this one too. They're fucking killing it on this stuff. Seamless cross-chain liquidity provisioning, protocol managed arbitrage. That was like you remember One Ring and stuff like that, and what was it? What was Danny's protocol? Popsicle. Popsicle Finance. He's just automatic liquidity provisioning and just getting best interest rates on whatever chain and just moving capital around automatically. So, they've tried that. They just didn't have the necessary cross-chain tech. But now they do, because that shit is seamless. They tried this. They've tried this. Like, everyone's tried this. Everyone's tried VE. But they realized, and I also have realized, that VE doesn't work without a federation. So notice I didn't talk about federations in this post. This is 2021. So it doesn't work. VE doesn't work without a federation. And in V33, we still don't know about what's going to play out there. We need a full cycle. But voter escrow and a federation works great. And there's only one of them. There's only one. That's it. Every other voter escrow protocol doesn't work because you need the third parties to recycle and sterilize. Well, this clearly worked out well. Cash flow above all else. Fuck you, pay me. And I'll know better in this next year and then in 28 and 29, and I'll know better about this rationale, but I'm inclined to think this rationale is completely consistent with the greatest investors of all time, including the likes of Warren Buffett. It's just, fuck you, pay me, and buy shit cheap. Distressed assets. That's it. Buy shit cheap. Save up a bunch of cash when times are good, and when everything looks like shit, you find the business that's still very functional, and the general public doesn't understand their ass from their elbow, so they're dumping, and you can buy it cheap. Kind of screams like Curve. Anywho, let's keep it going. What are your thoughts on leveraging Curve in terms of risk? There's risk. Big risk. There's risk with everything. There's risk walking out the door. I don't like flying on airplanes. There's risk everywhere, dude. Massive risk. Risk versus reward. That's the equation that's we all should think about with everything, not just investing. What's the APR? Everything in the planet, whether you're leveraging curve or leveraging S frax, S die, leveraging anything. It's all about risk. I don't like risk. I don't take risk. Isn't that a funny statement? If I clarify for a moment, I don't take risk. I buy things. So my sentiment is very simple. I have income. I buy something. I get more income. I buy something. I get more income. If there's a good investment, I buy something. If there's not a good investment, I take cash. Cash is either collateral or currency, depending on FX markets, FX market volatility. And yeah, clearly that's move indicator, DXY, you know, currency spreads, euro, yen. Very simple. So that's really why I'm so comfortable nowadays, because I just follow the rules. Define the rules. How much risk do you want to take? Random pattern generator? Define your rules. And then adhere to your rules. So I don't like leverage. Now I'm talking about leverage here with like an SFRAX, because that's a quasi position because it's liquid. But if I'm going to borrow like a 20 chip, I would borrow that amount. I would only borrow the amount that I'm comfortable with for an investment. This being not really an investment, it's more of a liquid position. So I would define it in the cash bucket. But if I borrow a 20 chip, I'm prepared to finance that debt from income. It's not that the 20 chip leverage is going to finance the debt created by taking the 20 chip. You follow me? My income from my investments would finance that, and this position is unto itself. So if literally this position went to zero, I'm still financing the debt, which is literally like my Cleopatra position, which is fucking worthless right now. That was a 25 chip that just, boom, evaporated into nothing. You can't get them all right. You just need to get some of them right. So how do you get some of them right? You buy things, you invest in things from cash flow. And it's paid off. You think of it as a purchase. Income, buy something. Income, buy something. Income, not something good to buy. Don't buy something. Don't invest unless it's a really damn good idea. You don't have to. Don't I remember, and I know a lot of people do this. I know a lot of you do this. You're searching for investments. You're trying so hard to find something to invest in. When an investment should be a screaming, all right, click. You won't even think twice about it. You're like, all right, I'm just buying it. Because either you have the excess capital from income, or it's like, oh my God, no one else is seeing this but me, buy it. Buy. An investment, that is strict prudent judgment. That's like an obvious investment. So that's really the best investment. It's a no-brainer to click buy. And you're not hesitant to, all right, this is no longer good. I'm going to buy something else. That's not what you want. I myself have done that. I'm no longer in that mindset whatsoever. I bought it. I own what I buy. I own my decisions. I own my investments. That's a big deal. Hope that helps. Raul, do you frax? Frax is one of my core positions. It's been for quite a long time. Fully round trip since my entry at like 260, 280 back in when it launched. It's 230 and change right about now. Damn. Oh, the horror. I literally bought here. That's what I bought. 2021, July 2021. It's completely round tripped. Okay? Nothing changed about the investment. One, two, it was a purchase, not a position. I bought it. The price changed. That doesn't mean the protocol changed. Okay. Two, it's a lock position. Great. I love it. That means I'm forced to own it. I'm forced to follow my rules. I bought it. I own what I bought. Don't folks say that? Like, own your decisions, own your losses, own it. So that's that sentiment that I define in my business rules at this point. Oop, no, decline. Talk to you in a minute. Um, Clearly, I got to wrap this up in a minute, folks. Not in a minute. I'm going to get to all your questions, though. Adam, did you opt to stake more Aave for that fixed rate go? I don't have any. Oh, Aave. I got a couple bucks in Aave. That's up. Go figure. Yeah, I probably want to buy some more. I probably want to get to about 4 times this amount because, you know, I want to be able to borrow my investment amount, which is about a 20 chip right about now, for the cheapest rate possible. So I have a reason to buy about, what is it, 200 Aave, 150 more. So then I could borrow a 20 chip at the greatest discount possible. So that, yes, I will. It makes sense to do that. So, just bear in mind what I'm stating is not just buy Aave. I don't state to buy or sell anything. That makes no sense. I'm saying that I have a reason to own 200 Aave because my investment criteria, considering the size of my portfolio, considering what I define as a proper position size, for me is about a 20 chip. So if I have 200 Aave, I could borrow a 20 chip at the cheapest rate, which right now is 2%. That's crazy. It fluctuates, but 2 and change%. That's really crazy. So I have a reason to. Don't do anything unless you have a reason to. Raul, hope it helps. Holy anoli. Any sex to off ramp curve USD or just have to trade for another stable? Yeah, USDC. I use Spritz Finance. Spritz Finance is just works great. Oh, there you go. Now you literally see everything. Spritz is crazy. This is where it's at right now. Juno until they get their shit together again. But you could literally, from Arbitrum, I prefer Ethereum. And this stuff is crazy. This didn't exist in 2020 and 21. This is insane. You borrow Go, swap it to USDC, and throw it in a bank account, and it's literally there in like 30, 45 minutes. It's not even an ACH anymore. Now it's that whole new Fed Now thing. Just like cash. And it's instant to a debit card. If you off ramp to a debit card, off ramp to a bank, no. Spritz card, no. Yeah, well, this is instant. If you put your USDC on a debit card, boom, you literally just click it on Arbitrum. It takes 10 seconds, and you go into a store and you swipe it. This shit is crazy. But obviously, to get here, you need income, you need collateral, you need cash flow, you need investments, you need a whole methodology and a whole structured business operation. Yeah, so it doesn't matter if it's a settlement currency. So all that matters is that it's liquid with a settlement currency. And clearly, Curve USD, frankly, in my opinion, if I'm going to hold a stable coin at this point, I kind of really like Curve USD. It's really crazy what it does with interest rates. So I happen to think it's one of the best designed stable coins I've ever seen thus far. And that's not just my penchant for Curve Federation. That's because of literally what Curve USD. Michael's positions were getting liquidated, and Curve USD was at a $1.18. Oh my God! It was over collateralized. It was absolutely insane to watch. And clearly, you don't want to overpeg, you don't want to underpeg, you don't want anything. You want it to be fixed rate. So that's the whole point, and that's why what they built is absolutely brilliant from a Eurodollar perspective. DCA, man, thank you, Cap. I think the same. Much a pleasure. Much a pleasure. No, I have not looked into Tsunami. You know me. You know me at this point, my man. I don't look into new shit. I'm everything that's new. I'm like, is it additive to something I already own? How many um, Napier? I'm like, boom, it already helps me. Like, I don't need to own it. It already helps me. I'm gonna get a fat airdrop from them anyway. I think. I mean, that was literally like layer zero. Oh my God, that did wonders for accounting last month in June. I changed the whole balance sheet. That was very welcome. So no, not to invest, but it's a new product. Omnipools, great, Conic, yay! I love it. That's what we need. We need more use for Curve USD. We need more Omnipools for. And guess what that is? Guess what the Omnipools are? Disintermediate. Yes. Protocol manager arbitrage. Yes. Cross-chain liquidity. Not really the cross-chain component yet, but that'd be like AWA. Cross curve. So if cross curve, I mean, kind of they go through Phantom. They have their infrastructure centered on Phantom. So it's not really like cross-chain liquidity provisioning, but that's what this is. That's literally what these Omnipool concept is. It's protocol managed arbitrage. They're automatically balancing liquidity, and I don't know. Point is, these are some old narratives that really, really played out over the last 2 years. Hope that helps, my man. What about pursuing a career in tech with the future macro, techno, socio-economic environment ahead? I don't know. Fortunately, I'm towards the tail end of my career and the need for involvement as a software engineer. But it's going to get weird. AI changes everything by the end of this decade. I don't know. We can always speculate. It's past the event horizon. What kind of world are we living in when you could ask AI to write an app and you show it a picture and it writes it good? Because right now you literally have to double check everything. You still have to write code. And then you could run it through AI and great, it tells you so many incredibly useful things, but you still have to write it. But when you could drop, Figma into ChatGPT and it writes the app and it's like you don't even have to question the app anymore, that kind of changes everything. And that's where we're going to be. So humans writing code, I mean, then you get AGI and it's like just the code is writing itself, and that's the event horizon, and that's weird. And it's weird when the software can enhance itself, and then you get that exponential evolution of intelligence. Yeah, which is the whole Terminator narrative, by the way. But that's like right now. It's like boom, we're so close to that playing out, and that's coming in the next couple of years, where the software is self-improving. That's weird. So I don't know. I don't have the answers. I would say skills are always practical. I think in terms of my daughters, which have another decade plus before they're reasonably competent adults, at least according to the law, which I would agree with, is at least 18 years old. I don't think human beings are competent pre-18. So the law is pretty decent in that regard. And frankly, I don't think we're capable of making good decisions between the age of 18 and 30. You don't know shit about shit until you're 30. No offense to folks here that are under 30. I didn't know shit until I was 30. And even then I was like, I got to start figuring shit out. That's when I got married, had my first kid. And I was 30. So 30 is really where competence starts to accrue. Anywho, AROV now. Oh my God, that's what's it down 50%? Yeah, my Mantle's down 75%. Ramsey's full retrace. Fortunately, I still think Ramsey's and Nile are good. I like the exposure to Linnea and Consensus. I like the exposure to Arbitrum. It's killing it in the volume chart. So price action doesn't tell you the whole story. So I still like that exposure. I kind of wish I could turn back time on Mantle. I really hope something plays out with Mantle that proves me wrong. But that's that freak investment that's like, oh yeah, you didn't see that one coming. And that's literally the story for meme coins. It's literally the story. It's like that investment you thought was dead, and it turns out to go to $100 million. So, all right, great. That's your punt. I would undo that investment if I could, but I like them. I like not Cleopatra, but I like Nile and Ramses. I like my exposure to Velodrome. That's so. Bear in mind these positions are maintaining well in price point considering the rebasing. So definitely look at the rebased your portfolio, the value of the position, considering the rebase. So in the D-Bank perspective. So Ramses has maintained still about the same amount of capital I put in, which is interesting. I don't really know what to make of that. I'll need 4 years to really digest that. But it's still quite productive. If I could produce $1,000 a week between all three of those protocols, it's pretty crazy because the deployment to Arbitrum, Nile, and Cleopatra was 65. If you take out Cleopatra, because it's just doing nothing, then it was like 45 producing 1,000 a week. It's over 100% APR on basis. I don't give a shit whether the basis goes to 10 grand. Deployed 45, making 52. That's a good investment. That's why it's really requires a different mentality to think about investments. Clearly, you could buy it cheaper, so that means you could buy a higher APR. So if the price point depreciates, that means you didn't get the best possible opportunity. But it doesn't mean you still don't have a good investment. Deploy 45, make a 52. That's crazy. That is an insane investment. So now if you deploy 20 and you're making 52, that's an even insaner investment, which basically translates to you got to get things at the cheapest price possible. Anywho, we'll be assessing this thing over the next couple of years. And clearly I got exposure, so more than happy to have that conversation. Ran the pattern generator. Thank you, good sir. Much a pleasure. Arrow thoughts on Ave fee swing. Oh, better bump up my little Ave bag. Yeah, of course it's feasible. That'd be nice. What's it paying right now? Pays 4.6%. That'd be nice if it was 20%. Changes the equation a bit. Snoke, much love, much a pleasure, much a pleasure. Adam, a consideration tapioca aiming to be competitive with discounted go rates, but perhaps not fixed rates. Frankly, I think tapioca is going to be competitive with a lot. They're going after everything. Boom, boom, boom. So I look forward to seeing this play out because at an Ave at 183, 285, 86, basically if tapioca becomes on par with anything, that's cool. If tapioca becomes on par with the cheapest thing in here, which is LUSD at $9 a tap, if this thing's producing 20, 30%, that's cool. That's cool. Just saying. Um, Anywho, My man. Where do you see Aave? Where do you see an Aave how much Aave stake gets lowest rate possible for borrowing? Here. Dashboard Go. So it's five. So the cheapest rate is 5.83. So if you have 50 Go, 50 Aave, you could borrow 5 grand at 5.83% minus the incentives, which is 3.79%. So you just subtract the two. It's always minus 379 until that incentive is exhausted. But it's up to 8%. If you have no AVE, you're about paying 8%. 8% minus 3.79, 5 and 2, 5, whatever. 4 point, whatever it is, 4.2, 5, 4.8, something like that. So that's interesting because collateral, investments, chicken and the egg. You need both the chicken and the egg. And that's literally a business. Adam knows this. Structuring business. Heck of a rabbit hole. Holy and Norway, thanks, Cap. Learned something new today. CVXCRV way down, but I look at it as a purchase, like to say, and it continues to pay on top of meat space salary. As simple as that. It's additive. This is the original narrative we started with years ago. Buy a salary. Buy a pizza shop. It's the same thing. Except the difference is you got to put a hell of a lot of work into a pizza shop. This stuff, all you have to do is find a business that's immutable, deterministic, and going to continue existing into the future, which means pays the X amount on Thursday, pays the X amount next Thursday, and over the years, what do you get? You get a damn chart of how much is paying you, up and down and up and down, and hopefully higher lows and higher highs. A growing business. Buy a salary. My man. Excuse me. Yes, Tube. Yes, I did. Because it doesn't fuck you pay me. Maybe use it as collateral. Maybe a fee switch at some point, but it's irrelevant. For me, the appropriate thing was to just take the capital. Um, there's a fee switch. What's producing 20, 30, 40%? I make 20, 30, 40% on everything. So great. There's another thing that's 20, 30, 40%. I don't give a shit about principal appreciation. That's a red herring. It's going to lead you off track. Principal appreciation. Capital gains. That shit drives you nuts. Income by salary. Income by collateral. Income. So I don't care about appreciation. I don't care if curve goes to $5 or $3. I don't give a shit. I care about how much I make on Thursday because that's what I could live my life on. And I want that number to go up over time. And fortunately, asset prices nominally adjust according to consumer price inflation. Great. Just want to bank my life. I don't need that whole stupid shit about being rich and wealthy. I want to bank my life, which means more income. Anywho, hope that helps. Hope that helps. That was a bit of a digression tube on top of a layer zero airdrop sell. Trevor, much a pleasure. Athletic Concepts in the house. What's happening? Yeah, not so sunny day outside today, but it's a nice day. Good conversation. Listen, aside from crypto, I like talking about that legal stuff. At this point, I have a pretty good understanding of trust law in the United States. So if you guys actually start digesting some of that and investigating and have questions, I'm more than happy to talk about that. It's just all the IRC code related to trust and all state law. I mean, generally speaking, I'm most proficient in Florida state law. Um, we could look up other state laws. It's easy enough to look it up. We could do it on stream. And obviously the UTC or the UFIPA. So those are kind of like acts, like standards of reference that most states are adopting and they put into state law. But we could talk about that because that's kind of universal across the entire country. But I'm more than happy to talk about that topic as well because you can only talk about crypto so much. And what have I said? It's probably of equal, if not more importance to actually structure your shit. Because the worst possible accounting is done personally. You don't want to run any of this through personal accounting. And corporate accounting is just annoying AF. So the only other logical accounting methodology is private contracts. And that's not something that most people talk about. But at this point, it's kind of like obvious. And then it's a hindsight type thing. It's like, oh my God, private contracts. This makes perfect sense. Oh, and it just so happens there's state law. And it just so happens there's federal law. And it just so happens there's 400 years of shit and precedents dealing with running a business through private contracts. Oh my God. It's like the biggest realization I've had over the last 2 years that's just as big, if not bigger, than just the concept of investing in crypto. Anywho, last two questions and I'm wrapping it up. Tube, have you looked up owning crypto? And oh, my man. Okay, cool. That's the so there's four structures. Personal sucks. Corporate, pain in the ass. Trust, complicated and sophisticated. You see the amount of documentation that I've showed you guys. Self-directed IRAs. Four. Simple. So what is the benefit? Pretty much the similar benefits as what I've created. The only difference being IRA rules. You got to follow the rules. I follow all the rules. It's a retirement account. So you're not drawing on that until you're OAF. Old as fuck. So, yeah, at minimum, look into a damn self-directed IRA. At minimum, at best, look into start asking ChatGPT and then start asking me questions. We'll talk about this shit. I don't mind talking about anything, any question you have about it at this point. But whatever you do, don't head into the next butter zone, banana zone, running this shit through personal accounting. Oh dear. Just don't do it. Don't do it. With off the compound curve of tax free until I'm in your 60s. Boom, there you go. Self-directed IRA. Figure it out. Just Google, not Google. Don't even bother with the Google. ChatGPT. Not even Claude. ChatGPT. Do it. Do it. Do it. Not personal. Don't do any of this stuff in personal. I'm curious about how confident you got with your own trust documentation before getting reviewed by an attorney. Well, right now I just give it to an attorney. Literally, here's the kicker. When you're rational, I mean, I'm literally staring at words written by the federal government, staring at words written by the state. What does an attorney do? They're staring at the same words. When you talk, so there's two things attorneys do. They look at statute, they look at laws, and they look at precedents, which is like judges' rulings. They look at the Chevron deference precedent, and that's like deferring to the regulator's interpretation for ambiguity. Fortunately, Chevron got overturned, which means now it's the judge, and the judge is rational, and the judge looks at precedents, and the judge looks at the statute. The written word. Words are mightier than the sword. Words are the law. Fortunately, we have artificial intelligence that is additive on top of my absolutely insane level of rationality. That's why I have my confidence. The words are the law. I understand the words. I understand the relationship between the words at the federal and state level. Therefore, I understand the authority that's offered to myself and others. And it's the law. It's just what is. It's semantics, language. That shit is powerful. So that's how I got confidence. It's reviewed by an attorney, a third party. Let them review it. I'm curious. I'm curious. They're like, oh shit, look what this dude wrote. It's not interpretation. What I wrote is an interpretation. It's just, boom, this is the rules. It's statutory. Like Section 13 is literally just causality. This says this, and because this says this, therefore this is the resultant. It's mathematical. It's like A plus B equals C. It's deference, mutual exclusion. These are basic things of law and precedence and basically reality and causality. If then else, logic and reason. If this, then this, else that. It's the foundation for computers. So that the an attorney. What the fuck is an attorney? Oh, an attorney. ChatGPT really changes everything. How much these documents would cost from an attorney that understands something? Become an authority. Understand that we can do it. We can do it. You can do it. I did it. And you could do anything. And nowadays, you could really do anything, especially with help. And what I realized was a long time ago, doing anything involves questions. Unfortunately, you can literally ask AI anything, and it will at least give you a reasonable and rational response. And you just tell it to be semantic and accurate with its logic and reason, and it's going to be pretty damn good. Anyway, I hope that helps, my friend. Happy to talk about that topic. The con, what do you watch for macro? Not really. I mean, not anymore. I mean, clearly, Raul, Luke Groman, love watching Brent Johnson, and he's really nailed the playbook. Mike Howe is always fun to watch because when you watch Raul and Mike, it's like the banana zone's coming, and it's like, oh, it's kind of programmed into the system. They got to expand the liquidity. They got to refinance the debt. And Luke just nails it as well. And Lynn understands. Oh man, her book, The History of Banking, that's insane stuff. I love this history thing. I'm on a kind of like a history kick, meaning to get a couple of books, like the history of monetary policy, the history of banking, the history of stuff like that. Anyway, I don't really watch much nowadays. Every once in a while I hit YouTube and I watch Raul's latest, uh, hype you up hopium conversation, which is lovely because it's not hopium, it's just time. And it's exponential. And he's right. I see it. I see it not because he says it. I see it because I see it. I understand it. And I understand it because of this little fucker. 89, and we're going to get to the damn banana zone. It's going to be weird. Anyway, I kept Arrow's post up, and I've been talking about all this stuff. Anyway, I hope this helps, ladies and gentlemen. It is a Friday, so enjoy your day and relax. And think of some shit to talk about. And do some searches on ChatGPT and come back on Monday, and let's have a talk with the captain. So y'all have a good weekend now. Tell everyone to subscribe. Jump on Discord. Subscribe to Discord. We got a whole bunch of great rational people in there. And the best part is you get to pay me $10 a week, so that's a really great part, so I appreciate that. And we can talk about that too. I'll see you on Monday. Talk about everything. Catch you then. Peace.